Hi, it's Ryan Charles with the Loan Giants Daily. It's Wednesday, March 2nd, 2011, and today we're talking about something that affects every single one of you, and that's credit scores. Well, I've talked about credit scores in the past in my videos, and the reason is because it's so important in getting a loan nowadays. I'm going to cram as much information as I possibly can in the next 2 or 3 minutes. So when you're done watching this, hopefully you know a lot more about credit scores than you currently do. Well, let's start off with the range of scores. The lowest score that you can have is a 350. The highest is a 850. Anything over a 740 is considered very good. So your goal should be a 740 in this respect. 740 to 850 is actually considered all the same with almost every lender out there. So 741, 849, you're in that A+ credit score range. There are 3 credit bureaus. You get TransUnion, Equifax, and Experian. So how do they know which score to use? Well, what they do is they take the lower score. If there's more than one borrower in the loan, they take the lower scored borrower. And they take the middle score for that borrower. They eliminate the high, they eliminate the low. So the middle score of the lower of the 2 borrowers on the loan is the qualifying score. And keep this in mind, that sometimes you have non-occupant co-borrowers you put on a loan to use their income. Well, if you're using their income, then you got to use their credit score. So you can't use someone with strong income with a bad credit score to supplement your income that you need to qualify. If they're on the loan, their credit score is being used. So each of these 3 companies that we just discussed are actually private companies. They're not government sponsored. They all have their own software algorithms that they use to put together the scores, and they do not have to disclose how they do that. So you can't go to Experian's website and learn how they create a credit score. There are some commonalities between the 3 that they do disclose, and we'll talk about those in a minute. A few more things you want to know about these credit bureaus. They update once a month on the 1st of each month. So if you do something in the middle of the month, most likely it will show up on your next month's change. However, if you do something at the end of the month, it's not going to show up. It takes time. So the way it works is if you're paying a credit card, that company sends its information to these 3 bureaus. It takes time for those bureaus to update, and then it'll show up in the next month's change. So we talked about the commonalities between the 3 bureaus. Let's talk about what information that they have put out there for the consumer to look at to understand how the credit scores are derived. The most important one for 35% of your score, it makes up 35% of your score, is your payment history. And this has to do with your payment late. So if you're always on time, then you know that 35% of your score is going to be taken care of with an A+ rating. They manage those in increments of 30 days. 30 days late is the least, 60 is the next, 90 is the last, 90 is the worst on the credit report, and anything past 90 goes to judgment or you can have a lien filed against you. So I can't stress the importance enough of timely payments. If there's one thing that you can do, make your payments on time. The second thing that comes into play is the amount owed. Another word for this is utilization, and this makes up 30% of your score. So now between the 2 things that we've talked about, we've got 2/3 of your score already. Now with utilization, let's use credit cards for example. This is where it comes into play the most. You don't want to be too far utilized, and what I mean by that is 30% is the ideal figure. They actually would like to see some utilization. They don't want to see no usage at all, because then it looks like you perhaps are afraid to use the cards. But at a 30% utilization rate, so you have a $10,000 credit line, they'd like to see a $2,500 to a $3,000 balance on that card. Anything over there, it starts to hurt the score a little bit, and obviously it's incremental. So the higher you go, if you're 90% utilized, that hurts you a lot worse than if you're 60% utilized. My goal is 50% or less. That's just my personal goal. I try not to go any above 50% on those credit cards. 30% is ideal. The next 3 parts I'll talk about briefly because they only make up 1/3 of your score. But the next is the length of credit history, and that makes up 15% of your credit score. So younger borrowers out there haven't had that long to establish your credit. You can't do much about this. But the longer you have a card open, or the longer you've established history, the more it's going to help you in this respect. This is why if you have a credit card that you've had for a long time and it has good ratings, that you shouldn't close it. Pay it down to 0, but keep it open. Now, I'm not saying keep a ton of cards open, but 3 or 4 or 5 at the most would be a nice number. But those ones that you open when you're 19 years old, keep those open because those are really helping your score for this 15%. Well, the last 2 components only make up 10% each, so we'll touch on them briefly. The first is new credit. So basically, the things that are on your report most recently are going to affect you more than the things that are on your report in the past. So if you've gone on a recent spending spree, you can expect this part to be negatively affected. So new credit makes up 10%. If you don't have a lot of new credit, then you expect this to be a strong point for you. And the last I'll talk about also makes up 10% of your score, and that's the type of credit that you have. Lenders like to see a diversified usage of credit, and what I mean by that is they like to see a mortgage, an installment loan, and 2 or 3 trade lines would be ideal. They don't want to see all credit cards and no installment loans. And when I say installment loans, I mean car loans, student loans, unsecured personal lines. Those are installment loans. Mortgages as well. So they like to see a nice usage, and if you've got a nice balance, you can expect that part of your score to be high. So there we go. We talked about what makes up your credit score. So now you know, you got an idea. Basically, make timely payments and your score is going to be pretty good. Don't use your credit cards too much. Don't max them out. You're better off using 2 or 3 different cards and using them, up to 50%. Much rather than having one card. I know it's easier in the payments, but it's not as good for the credit score. By the way, the average credit score right now, you're going to read it all over the internet as different figures. I can tell you from experience, from what comes across my desk, I'm seeing an average score right now somewhere in the mid 680s, high 680s. Like I said, your goal is a 740. You need a 640 at least to be able to do business. So if you're not at a 640, I suggest you check out my website. Go down in the links section. I have 2 companies that I work with that will rehab your credit score. And in fact, if you check out the tab section of my website, you'll also read about how you can get their services for free when you close a loan through me. Alright, so I lied to you. It's definitely longer than 2 or 3 minutes, but there's just so much information I need to try to get out there to you guys. Credit scores are so important. If you want to talk about your score independently with me, call me. I'll be glad to help you. I'm not a credit counselor, so I would suggest if you need extensive work to call one of the 2 companies listed on my website. But I would be glad to point you in the right direction. It's Ryan Charles with the Loan Giants Daily. If you like the information I gave to you today, you can subscribe and you can get a different email from me every day, personally recorded, and hopefully this will help you. If it can help someone that you know, forward it on Facebook. Get it to them. Let's get everyone's credit scores back up to where they belong so we can all get great financing. Ryan Charles, Loan Giants Daily. Talk to you soon. Bye.